Hey everyone, Praveen here, and today we're going to discuss a really interesting question and one that is fundamental to the whole cryptocurrency space. Is Bitcoin money? It's a heck of a question, not only because you have to define both Bitcoin and money, but because the Bitcoin narrative itself has been changing. And as crazy as it sounds, narrative plays an important role in something eventually becoming money. Well, let's start with the definition of money itself. Your standard economics textbook defines money as having three features. Number one, it's a medium of exchange. Today, you can go to a restaurant, have a sumptuous meal, and pay for that meal with money. That restaurant can use that money to pay its employees and buy equipment and ingredients. If we lived in a barter system instead, the restaurant may have said, "Hey, if you want this sandwich, you'll need to give me a bushel of wheat and a gallon of milk." That would have been a very difficult trade to execute. Money facilitates trade a lot better, a lot more smoothly than the barter system did. Money becomes a medium, a conduit, a facilitator of goods and services being exchanged. So that's the medium of exchange function. Two, money is a store of value. That restaurant takes my money and keeps it for a while in their checking or savings account so that they can meet their upcoming expenses. They don't instantly convert that money to those ingredients or that oven or to pay their employees. The money that they have stores value. That's the store of value function of money. And third, money is a unit of account. The restaurant reports all of its transactions, assets, and liabilities in monetary terms. Think of their financial statements, their income statement and their balance sheet, for example. They don't report how many ovens or refrigerators the restaurant has or how many onions the restaurant bought. The statements say that the restaurant has, say, $100,000 worth of equipment and bought $100 worth of onions last month. Money becomes the unit of account, the base by which all other transactions, assets, and liabilities are measured. With these three features, medium of exchange, store of value, and unit of account, let's ask, was Bitcoin even supposed to be money? Let's look at the Bitcoin white paper to start answering this. The opening line of the white paper defines Bitcoin as a purely peer-to-peer version of electronic cash that would allow online payments to be sent directly from one party to another without going through a financial institution. Well, right off the bat, that reads a lot like the medium of exchange function of money, doesn't it? But I think embedded in that are the other two functions too. What do I mean by this? The white paper does not say that Bitcoin is purely the infrastructure that allows online payments between peers. It's not talking only about payment rails like Visa. It's talking about a peer-to-peer version of electronic cash, which implies money. And for these peers to make these electronic cash payments, the cash received should be worth something, doesn't it? It should have a store of value. So what are we saying here? Are we implying that for money to become a medium of exchange, it should first be a store of value? That's exactly what we're saying. Vijay Boyapati, in his brilliant 2018 article named "The Bullish Case for Bitcoin," summarizes an argument from a prominent economist in the 1800s named William Stanley Jevons. The argument states that anything that becomes money goes through four stages. And as we go through these four stages here, think of where gold was a few thousand years ago. It's first a collectible. Hey, here's this shiny thing that not many people have. I'm going to store some of it at home and wear the rest of it as a necklace. It'll signify that I'm a high-standing and wealthy member of society. It's then a store of value. Hey, this gold thing isn't going away. People want a lot more of it, but it's scarce in supply and its price is skyrocketing. A few years after that, okay, now a lot more people have gold and its value is stable. But glad I got in early. It's then a medium of exchange. Hey, I want to buy a ton of wood to build my house. I'll just pay a few gold coins and be done with it. It's finally a unit of account. Honey, did you hear about the Joneses? We're rich, but they're super rich. We have 2 gold bars, they have 10. And that's after they bought their second home by the beach for 1 gold bar recently. Now let's come back to Bitcoin and go through these 4 stages. You could say that it was a collectible in 2009. Hey, here's this neat thing that not many people have. You can say that it's a store of value today. Hey, each of these coins is worth some serious money. But no, I'm not going to use it to really buy anything. I'm just going to hold it because its price may increase further. A few years from now, once adoption reaches some critical mass or a saturation point, it could become a medium of exchange. That restaurant we talked about earlier may say, all right, you can now buy a sandwich here for a fraction of a Bitcoin. And you may think, well, I am hungry. I have a bunch of Bitcoin. It's not really appreciating much in value anymore. I might as well use a very small portion of it to buy this sandwich. And finally, it could become a unit of account. The news headlines may one day read, Apple reported record profits of 1,000 Bitcoin in its latest quarter. Now, of course, it's all speculative and narrative driven. Of course, Bitcoin doesn't have natural intrinsic value. You can't even make jewelry with it. And many things have tried to become money in the past and failed. And governments around the world could coordinate to crack down on this whole Bitcoin thing. The Bitcoin project is fraught with risk, and there's still a very real chance it could all go to zero or be made outright illegal to hold. But Satoshi Nakamoto's vision itself, as stated in that first sentence of the Bitcoin white paper, I think indicates that Bitcoin is not some innocuous payment rail. Peer-to-peer electronic cash is not the starting point. It's the destination. We're in early days of stage 2 of Bitcoin becoming money. We're watching it try to become a store of value. It's not yet a medium of exchange or a unit of account. So to summarize, is Bitcoin money? Not yet. Will it ever be? We don't know. Is it supposed to be? Absolutely yes. Hey, thanks for watching. Do like the video and subscribe to the channel for more such videos. And please share your feedback in comments. Thank you so much.